Let's talk the king of altcoins, Ethereum, and could this liquidity issue have an impact on the short-term future of the most actively used blockchain? Well, this issue could have a huge ripple effect on the market, but could history repeat itself, and what can we expect? Last time the supply got lower on exchanges in November 2018, Ethereum soared from $80 to $366. We're back with BeInCrypto News, and I'm Jessica Walker. If you want to keep up to date with this wild world that we know as crypto, give this video a like and also subscribe to the BeInCrypto channel. In last week's video, we spoke about Bitcoin facing a liquidity issue crisis on some exchanges, actually limiting users' cryptocurrency buying abilities. Well, now Ethereum may have the same problem in the short term. The ETH movement that we're seeing away from exchanges is actually similar to that of November 2018, before this 2019 bull season that some of you may remember. Now, of course, although the performance of ETH is actually somewhat correlated to Bitcoin's success, there is one big difference. Ethereum's not a fixed supply coin, so how can it roll into a liquidity issue on exchanges? And how could this impact the price? Well, let's find out. 2021 is set to be a busy year for the king of smart contracts. There's big plans in store with the launch of ETH 2.0 and also CME futures in February, and in general improvements to the whole network. Well, this cryptocurrency's calendar is pretty full, but could a liquidity crisis actually compromise these plans? Keep watching till the end of the video and I'll be bringing a BeInCrypto technical analysis on Ethereum. So first up, we're noticing Ethereum stored on exchanges has actually dropped to 22% from 26%. Now, although this might not actually seem like a really big amount, it actually equates to a huge amount of ETH. And if this trend continues, it could mean further significant reductions. So the chart that you see now actually shows this movement is expected to continue. So where is this going? Well, it most likely ends up in wallets where it will be held or spent as gas for decentralized finance or other apps. Now, this decline in ETH on exchanges has actually been taking place for a while. Initially, investors were moving their Ethereum away from crypto exchanges and into DeFi protocols to participate in yield farming, which actually doesn't come as much as a surprise to anyone, as everyone remembers last year was the big booming year for the DeFi industry. So analysts from firm Sentiment actually referred to this move to holder wallets as the tone of one of the most promising signs for the Ethereum bulls. So why are they leaving exchanges? Well, number one, users actually may be transferring Ethereum to cold store wallets as long-term investments. While Ethereum seems to be correcting in the short term, it is expected another upward move and could reach a new all-time high sometime very soon. The second point is the total value locked actually grew from around $600 million to almost a whopping $25 billion. This increased demand for Ether, which actually acts as the gas for the Ethereum ecosystem. This increased use in DeFi means that users need more Ethereum to complete their transactions. And the third reason, besides the growth of DeFi and the use of Ether in general, the introduction of Ethereum 2.0 actually created a new mechanism for ETH users to generate additional yields and additional rewards. So this is bullish for ETH, but why? Well, the drop in the amount of Ethereum on crypto exchanges is a huge bullish sign for Ethereum. As it'll be no supply, it will be increased high demand. The more buyers they see in the market, the less people are willing to sell. Now, who remembers 3 years ago when CME Group actually introduced Bitcoin futures platform, and right as this Bitcoin continued to break new all-time highs? Well, CME Group actually says it will launch Ether futures product by February the 8th of 2021. So now the million-dollar question, or the 1,000 Ethereum question, is Ethereum overvalued? Well, analyst from Pantera Capital, Joey Krug, actually spoke out that some Bitcoin-related data point to an upcoming turn towards Ethereum. So for example, Bitcoin dominance is at the high end of its range, which could lead to a rotation to Ethereum. He was also really quick to note not to focus too much on comparing the two, stating as digital gold and DeFi are two completely different things. And on that point, we do actually have to agree with him. So what have we learned from this video so far? Well, this bullish news for Ethereum, people are also putting their ETH to work into DeFi. And based on the analytics provided by Sentiment, this trend is expected to continue. Now, just before we get to the technical analysis, I do want to remind you to give this video a like and also subscribe so you don't miss these videos I'll be bringing you 2 per week. Well, now it's time for the BeInCrypto technical analysis on Ethereum. Now, long-term indicators for ETH are still bullish, suggesting this upward move is actually expected to continue. However, due to this rapid rate in which we're increasing, the closest support level is found at around $800. Now, beginning in March, ETH indeed began a bullish impulse. It is currently in wave 4, as you can see in the chart in blue. Now, a more conservative target for the potential top of the move is found around $1,000, $751. So as of Tuesday morning, which is today, Ethereum actually broke out and just missed its all-time high by a hair. So I want to ask you guys, what can we expect next for the next future price move? Drop your comment in the comment box below and we'll get around to respond to them. Well, everyone, that brings us to a close for today's video. Thank you so much for watching. I'm Jessica Walker. This is BeInCrypto News. See you again next time.